Hello everyone, welcome to this 12th weekly edition of the COVID-19 Survival Panel presented by ESS BIZTOOLS and our affiliates. Today I have Mark Holton and Dale Crosby with us as our guest speakers. How are you today, Mark?
You're very well, thanks, Peter. Yourself?
Good, thank you. Good. And Dale, how are you?
Yeah, we're doing pretty well in Sydney today. It's a beautiful day, thanks.
Beautiful day in Sydney. Sailing this afternoon, eh?
Unfortunately, no.
Okay. Okay, well, we'll get back to the serious side of this now. We'll just move on. So I've told you our presenters, Mark's from Smith Inc. Proprietary Limited, Dale's a Director of High Tech's Soft Touch, and I'm Peter Towers, the Managing Director of ESS BIZTOOLS. If you have any questions, and I know that we have people watching this live on Facebook, welcome. And many of our regular viewers watch the recording of these webinars at a time suited to them. If you're watching it at 3 a.m., please don't contact us then. But if you have any questions on any aspect of what our keynote presenters have to say today, and you'd like further information, please send me an email, peter@essbiztools.com.au, and I'll pass your question on to Mark or Dale and get an answer for you. And we will publish the question and the answer on our website. If you're looking for the recording in a few days' time, you'll be able to find it on the ESS BIZTOOLS website, and you can watch the previous 11 webinar recordings also on our website, essbiztools.com.au. I now want to introduce you to Mark Holton, the Director of Smith Inc. Proprietary Limited, Business Advisory in the post-COVID-19 accounting industry. And this is the first part. Mark's going to present further segments of this story on business advisory and how it's going to relate in the post-COVID-19 accounting industry later on. So, Mark, I'm just switching across to you now, and you can present to us. Thanks.
Let me share my screen, Peter, and we're up and running. Well, good morning, or good afternoon, good evening, everyone, and welcome. The topic that I'd like to talk to you about today is basically what the industry is going to be doing over the next 3, 6, 12 months, maybe the next couple of years, when it comes to business advisory services in a post-COVID world, I suppose, is the way that we're looking at it. Okay. Excuse me, we're having a few dramas here with the technology. Okay. I've spoken to quite a few different accounting firms over the last 3-6 months. And a lot of those firms are telling me that they're spending a lot of time dealing with staff working from home and other associated workflow issues. In other words, how do I keep things moving? How do I keep the same productivity that we're doing when we're face-to-face? They're also telling me we're needing to deal with multiple client questions relating to JobKeeper and the other stimulus measures. In fact, many accounting firms leading over the last couple of months have been smashed in this particular area. And also another challenge is how do I communicate with staff and clients in a more digital mode? And I mean, we're talking today in a more digital mode, which is often for many accounting firms is a new challenge, particularly when we're used to spending time with our clients in the office face-to-face. Well, that's a challenge that we now have to sort of try to overcome. But when it comes to compliance services, the industry is very busy. Some are telling me busier than it's ever been. WIP is getting up and up and up, which means that eventually debtors are going to have to be managed and controlled pretty well. But at least at the moment, we're doing an awful lot of work. When it comes to advisory services, we tend to look at advisory as something that we generally do as well as compliance. Well, I think that needs to change. I think we've got to be doing advisory as part of that entire service offering in accounting firms. And again, talking to many firms, they're telling me that they're doing a fair bit of business continuity planning. Okay, helping a client work out what happens in the future. I see this as one of the sweet spots for advisory in a post-COVID world. and that is recovery-based services. How do I get back to where I was before this all started? How long will it take? What do I need to do? Who's going to do it? When's it going to be done by? In other words, what I'm really tying that back to is a little bit more strategic type planning for clients in their businesses. And what that comes with is additional requirements for cash flow management. We all know cash is king. I mean, accounting firms at the moment are telling me they're accruing a lot of WIP. Many are telling me they're finding it difficult to know how much and when to bill for JobKeeper services. But eventually, those debtors need to be managed. Cash flow needs to be strong in your firm, let alone for your clients. So I see a real opportunity here for what I call action planning, which is budgeting, cash flows, forecasts, board of advice meetings that holds the client accountable to the big picture plan that they want to achieve. I'm also told a lot of strategic advice in business funding disciplines is happening, with different states offering different loan possibilities, different deferral arrangements. And it's a wonderful thing, this country, isn't it? Every state's different. So how a lot of firms are telling me they're helping clients with funding. Well, that funding help should be happening all year round, not just when we're doing it now. And another thing that I think is paramount, and that's stress testing. Looking at things like the power of one with a client. What would happen if my revenue went up 1% through price as compared to volume? What would happen if my receivables were collected one day quicker? My inventory turned over one day quicker? Better management of direct and indirect costs. The key drivers in a client's business and how hard to pull those drivers is an essential advisory services that every client needs. So there's an awful lot of this happening. Many firms are then saying to me, well, we're doing a lot of this already, but guys, we're doing it because we have to. The client is in trouble. You know, what we've got to do is make sure we're still doing it when things start to settle down a little bit. So in the current environment at the moment, there's a definite need for accounting firms, in my opinion, to start working on their 2021 budget, looking at best, worst, and most probable case scenarios. And then that can then be filtered through to your clients. One of my great concerns is what happens come October, when all of a sudden JobKeeper theoretically no longer exists, when loans that have been deferred have to be repaid. And I saw a stat from the Ombudsman the other day that 1 in 14 loans have been deferred, 449,000 of them. But they're going to have to be paid. Leases are being deferred. Are many of our clients just walking along a tightrope that eventually they're going to come off? Recovery-based services are critical in this space. So we've got to look at how we ramp up our advisory services. And when we look at that, we've got to start to think about who's going to do what, when, and how in our accounting firm. What type of services will we offer? How will we price them? How will we package them? And more importantly, how do you get the client to buy into it and agree that this is something that we need to do and pay you a reasonable fee for the efforts that you're going to achieve? There is no better time coming out of this environment to start launching advisory services and looking around at all the good tools and solutions like ESS BIZTOOLS and ESS Biz Grants and how they can assist you and your firm to better manage advisory services. So how then do we create this environment? What do we need to do? Well, let me put it really simple on a slide. Number one, what I think we need to do is start to promote your advisory services proactively, not reactively. Client goes to bank says, I need a budget. Client comes to you because they can't do it themselves. You drop tools and do it and bill them once for it is nice, but it is not proactive, it's reactive. It's also not recurrent, and it doesn't create annuity-based advisory services for your firm. We need to start to track advisory services specifically and individually on your P&L. We need to budget for it individually to your compliance, tax and accounting services. And there should be KPIs on those particular advisory services to make sure that you're kicking and hitting the goals that you've set to yourself in your strategic plan. KPI metrics like number of clients that I'm visiting, things like number of proposals generated, number of needs analysis completed, discussions on debt management, discussions on funding. All this needs to be tracked. In a compliance-based business, we track KPIs, but they're safe KPIs. We track productivity, we track WIP, we track debtors, we track turnaround time, we track number of open jobs. They're safe KPIs. They're easy to measure. Advisory is a little bit different because it's unpredictable in nature. As much as you want to commoditize it and systemize it, you can only hit that to a point because every client and every engagement is different, hence the challenge. I don't believe in linking advisory services with compliance services unless the client specifically asks for it or they will respond better by giving them one package. Advisory services are dynamic, guys. They're innovative, they're different, they're looking forward. Compliance looks backwards. I've never believed in linking backwards and forwards together unless I definitively know the client will react better to it. And if that's the case, you do what you need to do to get the client on board. I also believe we've got to get our head out of looking backwards. There's some brilliant software applications in the market, dashboards, analytical tools. But many firms are just popping in historical data, which is safe, and having conversations about yesterday with their clients. Yesterday only works once because it's different. Eventually, the client will start to get bored with that. We've got to be looking forward. We've got to be looking at the future, not looking backwards at stuff that we could have changed, but we can't change because it's too late. We've got to start to not give it away for nothing. This one does my head in. I talk to accounting firms and they're telling me, we did this, we did this, we did this. I said, how much did you charge for it? Oh, we didn't charge for it. Why? That does my head in. Okay? If you're going to value this service and you're going to promote it to a client, then you should be billing for it. I've had firms say to me, what if we do the first few for nothing? Well, if you do it well and you do it for nothing, tell me how you bill the client later. I mean, this is value, this is education, and that comes at a cost. So have a bit of guts with the billing, okay? But do it, don't just not bill it. I also believe in passionately you need to get a business advisory implementation plan in place. That's what I do with accounting firms. We build the plan. And in that plan is accountability. In that plan is strategy. In that plan is working through what we're going to do in the future, how we're going to do it, who's going to do it, when's it going to be done, and when do we celebrate success. I am very good at holding accounting firms to plans. I'm very poor at holding accounting firms to thin air. We have to sit down and document the systems, the processes, and the people that we need to get to make this happen in your firm. And one of those critical first up planning steps, and this is all we'll look at today in part one, we'll look at some other stuffs in part two, is what advisory services do I in fact offer my clients? And on screen now, you can see a variety of different things that the accounting industry provide or tell me they want to provide. Okay? When I walk into a firm, my first question is, how much are you doing in advisory and in what particular area is it? And how much are you billing for it? Do you package it? Who does it? Because I'm looking not only at what they do, but how profitably they do this too. So things like, board of advice meetings. That's a brilliant thing. Meeting quarterly, meeting monthly with clients, holding them accountable to the plan. Well, we need a plan in the first place, do we not? So I'm a big believer in focusing on strategic advisory, number one, and looking at transactional advisory when the need arises. A mistake I made in my firm 20 odd years ago was going too heavily in the transactional area first, and that is using dashboards. And the dashboard of choice I had was a tool called Profit Optimizer that I used for years and years and years. And I got great results from clients, but I didn't get longevity because eventually the client said, that's much like what we did last time. And why wouldn't it be if we're looking backwards? There wasn't enough looking forwards. Okay? I'm all about now, let's set strategy. Let's work it through. Let's understand where we're driving towards and what's going to happen to make it happen. and then bring in transactional advisory as the need arises. I'm also a big believer in interfacing accounting firms with lenders and doing pre-lending assessments. I'm also a big believer of doing things like business value indications, having conversations with clients around what they want their business to be worth in the future, and then discussions around how we get them there, when we get them there, what do we do to make this happen. It's a very lucrative engagement process to get the clients on board and get them interested. Sure, you can do things like helping them with their debtors, their inventory, their creditors, managing their cash flow, creating their budgets. That's the formative stage of any strategic plan. But those steps, once done, can be maintained, but are more one-off in nature. I'm looking at annuity advisory services for accounting firms. Services we can do again and again and again. We can create a scalable model in those services and put the right people at the right level doing the right task as we go forward. So let's take one of them, for example, like a business value indication. I'm suggesting we have a discussion with our clients around what they want their business to be worth in the future, and then do a reasonable indication with them of what it's worth at the moment. Establish a gap, and then start to fill that gap through better cash flow management, profit management, cost control, and all the other key drivers that we spoke about earlier. And then each year, revaluing or re-indicating where the business is, which can create a sustainable point for value-based billing. When it comes to pre-lending assessments, then let's get our head around what the lenders are looking for. I trained a lot of the lenders in this country over the years when they were using Profit Optimizer to be able to risk assess and decide whether to lend money to you and your clients. So I've got a fair indication what they're looking at. So let's look at the client today. If they're looking to get money tomorrow, let's know today. Let's get our hands dirty and understand what the bank are looking at, and then measure whether or not the client is delivering those lending covenants at the moment. Work with them to be able then improve cash flow, profitability, de-risk the business, and get them to the bank in a much better position where the money's more likely to be advanced than not advanced. And the critical thing with this is you get paid. Not when a client goes to the bank and they call you up and say, I need historicals, we send them, want to bill it, client begrudges it. How does that work? Shouldn't we be better intertwined in that lending process? They are our client after all. We are their most trusted advisor. We've got to think more laterally about the services we offer. And then that leads me from there into what services that I call more lucrative. And that is doing things like business planning, assisting with government grants. I cannot understand why the industry isn't doing more of this. And that is helping clients pay your bill. Looking for grants that might be dollar for dollar matching, business development, business enhancement, business commencement, call it what you will. Have a look at ESS Biz Grants as a tool to help you in that space. But there is no better way to fund your bill than have the government provide all or partial funding of that bill. It takes the pain process away. But we've got to start to look at these services as being great. These are the additional ones we can do as we might move through the client journey. And then that leads me, so we're running out of time obviously, to what I call scenario planning. Over the years, and I've been doing this with clients for the best part of 20 and involved in this space for well over 25, still look pretty young, Pete, do I not? Pete can't talk, but I'll tell you, Peter is saying yes, he is, and so is Dave.
Yeah, I was unmuted.
You're a bit slow. I was giving you a lead then.
You're going well.
In the early days when I was doing this, I had a client walk into my office, believe it or not, and say to me, Mark, I just bought a factory. Is that a good idea? And I said, what do you mean you did that? He said, well, you understand that my current space is not great. I saw a factory. I bought it. Is it a good idea? Thank goodness at that stage I was doing advisory because I could sit him down, project forward and show him that it probably wasn't the best thing, but it was done. When I said to him, why didn't you come to me earlier? He looked me in the eye and said, I didn't know you offered that service. And that was the biggest kick in the ego I got, because how the hell are clients going to know we do this if we don't tell them? So I swore that day that any decision a client was looking to make, I don't care whether it's should I or shouldn't I, because I reckon every client thinks should I or shouldn't I, should I or should I not buy that factory or buy that office instead of leasing it, employ a new person, open up a new factory, launch a new product, okay? Should I or should I not take advantage of early settlement discount? Should I or should I not buy that new car, buy that new forklift, buy that new computer system? Why don't we get involved in what I call scenario planning? But you know what this really is? This is how would you like to see the financial impact of key business decisions before you make them. This is us working with clients to show them if they do something, what the position will be after that decision is made. And that is lucrative advisory services. Sometimes you can go at the front end of your service offering by offering this. Other times you'll have to develop it through. That's what makes clients different. But the first stage in smart advisory services is working out what you want to offer, how you're going to offer it, who in your firm is going to do it, how much you're going to price it for, and then, guys, step off the curb and get out there and do it. And with those thoughts, before I pass back to Pete, I would like to refer you, and I'll hold this up, even though most people probably can't see it, but it's the Commonwealth Bank Accounting Market Pulse Report that was released this week for June 2020. And I suggest you get onto the internet, download a copy of it, because there's 2 pages that I think are really important. Page 8 talks about the accounting firm's responses to coronavirus. The number one thing 79% of accounting firms said they have done in this time is they've increased proactive communication with clients. Why does it take a pandemic for us to start to talk more to clients? 79% are saying we are talking more to clients. 61% they say they've reduced overhead, predominantly rent, which could be a consequence of working from home or other hybrid models. 58% have reduced equity partner drawdowns. And finally, there's a few more there, obviously, but 58% of firms have introduced employee wellbeing programs. This is a really interesting report, and some of the data into it is critical. But with only a minute or so to go, I also want to draw your attention to page 11 of that report, and that is the practice areas expected to be the most in demand leading out of COVID-19. Number one, 70% of firms are saying business advisory services are the key service we need to offer leading out of COVID. 70%. I wonder what that figure would have been before this started. I can tell you nowhere near 70. 70% would have said, I want to do this stuff, but I'm too busy. I want to do this stuff, but I've got the wrong staff, for whatever other reason. Now we're looking at it and saying, this is our time in the sun to do more advisory work. 61% was saying business recovery services, 48% tax consulting. Hasn't tax consulting gone down the tree a little bit? Yeah, it's still required, always will be. But again, guys, that report is the CommBank Accounting Market Pulse Report, June 2020. I've only spoken about 2 minor parts of it. Get a copy of it and have a look. Have a look what your peers are saying. Maybe you contributed to it. So I'd like to leave you with a challenge today. The challenge, first of all, is get yourself organised, get yourself ready, and get your plan in place, your implementation plan, to be able to not only deliver more advisory services, but prosper and help your clients prosper as we go out of this or lead out of this particular dilemma we're facing worldwide. Sure, it might take a little bit of time, but the opportunity is never better to launch advisory services. Thank you for that, guys. Back to you, Pete.
Thank you very much, Mark. That was a very interesting presentation. And I would also endorse Mark's comments about that Commonwealth Bank report. It's always very interesting to read. Okay, I now want to just switch across again, and we are going to introduce you to Dale Crosby, a Director of High Tech Soft Touch. And I'll just switch the screen. So how are you today, Dale?
I'm doing really well, thanks, Peter. Pretty good. Okay, am I ready to go?
Yes, thank you.
Okay, share the screen. My screen's visible. Can you see my screen, Peter?
Yes, thanks, Dale. Yeah.
Brilliant. Okay. So, yeah, no, I really enjoyed Mark's presentation, and particularly the comment he made towards the end about 79% of firms talking more to clients. And as you said, it's a really salient point, the fact that it's taken a situation like this to get to a stage where we're actually being proactive. It creates great opportunities as well for us to start reframing the relationship. And I think one of the major challenges that we have with this sort of service that we're talking about is that we know clients need it. Clients know they need it, but they don't often see or believe that their accountant can provide it. So we've got this opportunity whereby we're engaging more readily and more proactively with clients on a whole range of issues. And that opportunity creates the chance to start to talk to clients about the things that we can do to help them. This presentation is a little bit about virtual CFO, but it also flows across to business advisory, and I'll talk a little bit more about the difference that I see in that difference in terminology. We've got about 180 firms currently enrolled in our virtual CFO course, so there's a plethora of information that I'm getting about some of the challenges and issues that firms are facing in trying to commence some of these programs. And I'm going to present some sort of preliminary data on this in this presentation, but if you'd like further information or to see the full report, don't hesitate to contact me. So let's look at definition. Virtual CFO is a person or an accounting firm that takes on the role of CFO for a client on a contract basis. And because of technology and cloud, we're in a position where, as accountants in public practice, we can work remotely to the client, we can monitor finances and provide advice, we can access the client's financial and accounting information, and we can spread the client's investment across a number of firms because we're able to leverage it. So the message that we want to get across to our clients is that we're placed to help them focus on essential strategic, operational and financial planning through the technology that we have available. And of course, this only really works if we're proactive in the way we communicate with clients. And I think that's often, as I said, the problem in that clients frame the relationship with their accountant in a certain way. And it creates almost a special breed of accountant to step outside that traditional paradigm or approach and say there's much more that we can do to help you than we're doing at the moment. Part of the problem, I think, is also the fact that every firm out there says it provides business advice. And of course we do. The problem is that we only provide it often on an ad hoc basis and when a client needs it or requests it. So there's value in using the VCFO description to describe clearly what it is that we can and will do to support the client with their business. It's part of the transition process. And I'll talk about how we explain that to a client shortly. This is a simple maturity model of VCFO services which I've used before, and it perhaps helps to describe the evolution or the progression of services that we can and are providing to firms in this area. Most firms are still stuck on foundation services, and even with those services, often we're struggling to deliver those effectively. Financial analysis and reporting, financial benchmarking KPIs, review meetings, and so on. And then we start to move on to advanced financial analysis and reporting and further forward. So we're certainly in the top half of this quadrant by and large. And the challenge we've got is even to get to this stage with clients so that we can start to show them how we can add value. Perhaps we see one major challenge is that we simply don't have the internal capability or there aren't enough people in our firm that have the motivated ability to actually deliver these services. So what's the value proposition? Business owners want to implement change, but they don't know where to start. As a business owner, what are your options? Are you equipped for the challenge? How will you stay ahead of the game? As a virtual CFO, we can help you actively manage your business, plan for the future, improve internal processes, implement internal controls. And hopefully through the last 3 or 4 or 6 months of conversations, we're starting to give our clients a better understanding of what it is we can do to help them. There's a whole range of services performed, and Mark's gone through quite a few of these already. There are a lot of different things that we can do which come under the spectrum of VCFO services, or the things that lead to the high-level strategic advice that we'd like to provide to our clients. So a lot of things that we could be doing. Again, the challenge often is that we're doing these on an ad hoc basis as the need arises, rather than saying to our business clients, this is what we do to help all of our clients. I thought I'd share some information from firms that have participated in our course. And the first bit of information is the extent to which these services are structured or unstructured. So 68% of firms participating say they currently provide unstructured virtual CFO services, which really means that they're providing them on an ad hoc basis. There's no leverage. There's fewer systems and procedures, and probably it's 1 or 2 people in the firm that have a particular motivated interest who actually have these conversations with clients. Proportion of firms providing the services for less than 1 year, 10%. Between 1 and 3 years, 16%, and more than 3 years, 6%. So certainly in this cohort, most people recognise they're providing these services in an unstructured way. One of the questions we asked is, what software platforms do you use? And all the typical candidates come up in this list, and there are more. But these are just some examples, which was from early on in the days of this particular course. And there's probably no surprises with any of these. Often I think the challenge is that firms might be using half a dozen of these on an ad hoc basis, but there's no real consistent approach within the firm to utilising some of these platforms to deliver services consistently to clients, except when we're talking about things like Xero, MYOB or Excel. Even with financial reporting systems like Fathom, Spotlight, Futurely, and Castaway and others, often they're being provided on an ad hoc basis. Even with firms I've been working with who say they provide these services consistently, when you actually walk into the firm, you might find that they have 5 or 10, maybe if they're lucky, clients actually utilising these platforms consistently. And that's often one of the major challenges. Why is that the case? Some of it goes back to a lack of a centralised approach in the firm, and perhaps there is no real internal champion, or maybe the internal champion is a partner who simply doesn't have the time to train other people. Or maybe it's simply that we're relying too much on the tool, as Mark said, rather than focusing on the conversation and the discussion about what clients really need. So these are some very selected responses. What key projects are you undertaking to support VCFO services in the next year? So 8 examples from firms participating. General work with existing clients to implement more of a formal service. Formal process documentation for lower tier clients. Taking time to learn the programs, the software in more depth. Looking at how we can better report information, so potentially employing somebody to produce Power BI reports, which brings together data from different sources to give our business clients a more holistic view of what's going on in their business. Scoping of services, pricing, updating website, membership into the VCFO Association, related seminars and training. Positioning, how we market through the development of structured service packages, establishing reporting systems, creating programs for clients. And I've got another 70 or 80 projects that different firms have nominated, most focusing on these sorts of general themes. So clearly we're interested in doing a lot of different things. The challenge is making it actually happen and bringing it to life. I asked 2 questions. What are your key challenges in relation to management of scope of work and fees? And what are your key challenges in relation to workflow? So for those of us that have started to move in this direction, we can probably relate very much to these. Within my firm, I'm the only one ready to take on this next level of advisory, so I want to do a great job with limited time constraints. So lack of time, lack of capacity, lack of leverage. Timely communication with clients, ensuring the client is understanding reports correctly. So probably that issue revolves around getting information from clients in a timely fashion so that we can report back to them timely. And then rather than simply give a client a report, try to work out what's the conversation we want to have around it. Convincing clients on cost, finding capacity. Requirements vary by clients, costing and quoting is a complicated process. And this is just feedback from firms participating in the course. Communicating value to clients, setting fixed prices, so some consistent themes there. Pitching the service to clients. Ability to utilise staff across the firm and adding value to financial reporting. We're all experiencing these challenges, and to me, what's underlying all of these is a lack of formal process and consistency in the way we communicate to clients and the way we actually deliver these services. If we continue to provide them in an ad hoc fashion, we're not going to get the leverage, we're going to struggle to manage scope, and we're going to find that, as many firms already have, is that these services are more unprofitable than the traditional compliance services that we're delivering. I work with one firm that probably has between 50 and 80 CFO clients, or clients that they class as CFO clients. And that firm's almost made the decision, they've almost decided that they're going to accept write-offs of around about 20% with these clients, simply because they're unable to effectively leverage the delivery of the specific services they're trying to provide. They're struggling to provide the services within the time cost budget that's been established. And also probably struggling with clients who come back to them and say, well, given that we're paying you $50,000 or $100,000 for an annual service, we expect more from you than you're delivering at the moment. So it's a hard conversation to have, but managing scope is critical. In terms of managing client expectations, some challenges that have come up. Location, available employees with the correct skills and workflow management. We know most of our accounting staff are compliance focused, and for some of those, they will never become advisory focused. So who is going to sit in front of a client and have the types of conversations that we want to have? Timeframes for delivery, redirecting conversations away from tax, scope creep, clients becoming too comfortable in the later months in what is being delivered and having to update the offering. So keeping it fresh can be a challenge. The budgeted value versus the time needed to spend with clients, getting costs right, and etc. So again, we can relate to all of these challenges. Do you market a specific VCFO service to clients? Generally, the answer is no. All lumped in under outsourcing services offered, which is interesting, from one firm. Marketed as a business advice. Not specifically. Bookkeeping, payroll, admin services. We don't market it specifically. We don't market the service specifically. It's been provided by clients when asked, or when a client has referred us to undertake for a mutual connection. This is the words of the person who provided it. So we can see that a lot of this is still very much ad hoc. So some key messages that come out of the feedback that I'm getting from firms that are trying to move in this direction. There's really strong demand from business owners for strategic business advice. There's no question about that. Accounting firms are struggling to develop strong business advisory platforms because they're not sure how to put consistent processes in place and deliver outcomes consistently. If we're providing these services on an ad hoc basis to clients who put up their hand, or clients that say, I really need help, then we're going to struggle to get consistency in the approach, and we're going to struggle to do things efficiently. We need to be providing some basic level of service to a significant number of our business clients, even if it's a background business health check or something that allows us to initiate a conversation about other things than tax and compliance. Many firms don't have many clients they feel would benefit from these services. So perhaps we do have more traditional clients. I always question that and always challenge firms to consider that perhaps the issue is the client doesn't see what the firm can provide. Or alternatively, although the firm says the right words, it is not in a position where it can deliver these services consistently. Firms struggle to effectively communicate the value of the services to clients, and advisory and management reporting work associated with this level of support often goes over budget, and it can be a real challenge. Even if, for instance, you established a $2,500 monthly budget for a meeting with a client, by the time you incorporated 2 hours of a partner's time, 2 hours of a manager's time, and other background activities, it's very easy for that budget to go over cost. So we need to be efficient. Some attributes of firms that make up the transition to virtual CFO. They have a very clearly defined value proposition and most likely brand. So it does help if we're very clear about what we want to do, rather than simply saying this is part of all the things that we provide to clients. We need to be committed to the process. They generally have dedicated people responsible for engaging strategically with business clients. The firms that I've seen that have most success are either virtual CFO firms, or they've got a team of people who do nothing other than work with clients in this way. And they manage clients' relationships in relation to the forward-thinking strategic conversations that Mark was talking about earlier. They're able to leverage key aspects of service delivery. They often specialize in a specific industry or client profession, which means that they have an innate knowledge of some of the issues and challenges that are going on in those areas. Sometimes they specialize in specific high-level services. Before I was talking with Peter about R&D grants, which is an area of focus at the moment, but there are certainly other areas where there may be benefit in specializing. And I think a key message is they understand that the value of the service lies not with financial reports, but with the quality of analysis and review. It's the conversation, the rich conversation around specific issues and challenges that really drives interest and engagement and creates value. And often when we focus too much on the reports, we find that, again, clients become dissatisfied and we wonder why the relationship and the engagement simply doesn't last. So I've sort of reached the end of my sort of brief presentation. I wanted to talk a little bit about some of the challenges that firms are facing and perhaps some of the solutions that they're looking towards. It's not an easy path. But there's no question that it's a path with a high level of engagement with clients where that engagement can be demonstrated. If anybody's interested in more information on virtual CFO, visit cpdforaccountants.com.au and have a look at further information on the different types of courses that we run. And Peter, if anybody would like a copy of that virtual CFO preliminary report on the survey responses, I'm happy to provide that through you as well.
Okay, thanks very much, Dale.
No worries.
Okay, so thank you very much. And what we've all heard here is a interesting summary by Dale. And Dale, I think your comment about the rich conversation is very important, is vital in this whole process, from my experience over the years of trying to offer these types of services.
Yeah, definitely. And rich conversation is very much a two-way conversation. So the skill lies in asking the right questions. And often we're very, I mean, it's the old story, isn't it? We're very used to giving solutions and demonstrating our technical ability, which we do extremely well. But perhaps we're less versed in asking the right questions to open up a conversation that gives us an opportunity to understand what's really happening from the client's perspective.
But to have that rich conversation requires an understanding of the industry that your client's operating in. And I suspect that is one area where accountants are probably not putting in that extra couple of hours early in the engagement to offer advice services, in really understanding what makes this client's business tick.
Yeah, definitely. Taking the time. There's so much information that's available online to give us an understanding of what's actually going on or what could be going on in the client's world. And it's the old story. We spend so much of our time on chargeable time and not on investigating how we can develop and improve the relationship. But I think you're right. I mean, if I look back to some of the firms I'm working with, where they've had great success is where they specialise in particular industries, and they understand what's going on because they talk to quite a number of firms that work, and they're able to deliver some pretty strong solutions.
Okay, so thank you very much, Dale, and we'll just go back here now, and we'll do the COVID-19 update, and we'll come back very shortly to Dale and Mark. This is just a summary of what's happening. Just a reminder that the coronavirus SME guarantee loans cease at the 30th of September. The rules established by the Reserve Bank basically say that any money that hasn't been lent by that date will be refunded to the Reserve Bank. If you've got clients who are looking for those types of loans, because I personally believe it's going to be very difficult to borrow money from banks once we get into October, November. And that's what the financial commentators are basically predicting. And the writers in the Financial Review in particular have been on that theme now for the last 5 or 6 weeks. It's going to be difficult to borrow money once the targeted finish date for JobKeeper comes up on the end of September. So perhaps you should be looking at your clients' requirements now. And that's going to require a business plan, budgets, cash flow forecasts to be submitted to them. And I've listed some of those there that you might think about them in looking at your work. And also, don't forget that there's still some of your clients might be eligible for JobKeeper. That is, if their turnover has reduced, say in the month of June by 30% as compared to June 2019, if they wish they could apply. And that's a very important classification if they wish to negotiate with their landlord on their commercial rent. Obviously, they've got to be an SME though to fulfill that requirement. And finally, it's most of the states and territories, although I notice Queensland, my state, hasn't yet finalised their legislation or their organisation for the handling of the home builder renovator grants. It's a bit frustrating. This support from the federal government was announced nearly 4 weeks ago, and one state is still struggling to get ready, as I just mentioned, and some of the others have only done it in the last week. I know there's some problems with the substantiation of what someone's actual income is going to be because it's based on tax returns, and obviously the tax office has got that information and are probably not very keen to make it available to a whole range of state and territory governments. There was an interesting article in the Financial Review 2 days ago about the concern that landlords have got about the tenants' code of conduct. They are a bit aggrieved, I think is probably the way to look at it. They think the government should have talked to them a bit more about this because obviously a lot of their tenants have been back to them. So if you've got clients who are in commercial tenancy arrangements who haven't renegotiated either a rent deferral or rent variation, 80% have, according to a report last week, in the major shopping centres around Australia. So your clients probably should be looking at what they can do about that. And there was also a comment this week by an insolvency expert, don't adopt business as usual. And really that's the story that Mark and Dale have both given us today in very good presentations. It's not going to be business as usual. And if you as an accountant, I think, try to continue in that mode that you might have had operating in January 2020, you might find that some of your clients do go somewhere else, or some of your clients are going to end up in great difficulties. It's not business as usual. And in fact, I wrote an article last week that said we're only at half time, if you want to look at it in a football sense, because after all, the football codes are back up starting again, so I thought that was appropriate. We're only at half time. There's still a hard slog in the second half for businesses to go through, and many accountancy firms also, because what Mark was talking about the growth in WIP, and then ultimately, hopefully, all that WIP's going to get converted into debtors, and then you've got to get paid. I think the quicker you face up to that WIP and make sure that the invoices are going out, the better. There's also the second phase of the superannuation drawdowns up to $10,000. If clients meet the stipulations, they haven't changed. But as I understand it, they can apply to the tax office to draw down that money from their super fund between now and the end of September. So thank you very much for Dale and Mark's presentation. Very quickly, ESS BizTools can assist you to introduce a whole range of packages to help you deliver business advisory services, and I'm just putting some of them on the screen now. We have speakers next week talking about crowdsourced funding, because I think that's going to be a very important area for you to be looking at as accountants, because funding of your clients is going to be extremely difficult after the end of September. And for those who have developed a new product, process or service, don't forget the early stage innovation company, and hopefully our crowdsourced funding intermediary speaking next week will refer to that. Debtors management. Mark's spoken to me recently about the problems in debtors days outstanding that many businesses are having. We have a package which hopefully will help reduce that. And I was talking to Dale earlier about research and development. Wearing my consultant's hat, I've had quite a number of inquiries in the last 2 weeks about research and development. There's a lot of it been going on, a lot of it probably through the lockdowns, and perhaps you should be looking to see who of your clients are doing that. And if they've been spending a fair bit of money, I'd be suggesting you get them into a company as soon as possible. I think government grants are going to be less obvious after the end of September, but they'll still be there. Grants like accelerating commercialisation up to $1 million, export market development grant up to $150,000 refund for an exporter. They're worth looking at and keeping aware of, and strategic plans and corporate governance. So please visit our website. Mark, have you got anything else you wanted to add? Or?
No, good, Pete. Happy to take any questions offline or at any stage.
We will be sending questions through to you, and
if any firms want to have a chat, I'm more than happy to have a chat to anyone at all. Just organise a teleconference as such to have a chat about their advisory plans, their advisory achievements, whatever the case may be. It goes without saying, so totally complimentary.
Okay, so thank you very much for that. Dale, we might switch back to you if we can, and just see if you've got anything else you wanted to talk about.
Yep, no, nothing at all, Peter. No, that was a good summary of where we're at the moment. So also, you know, if anybody would like further information on that feedback from virtual CFO firms, happy to provide that.
Yes, I think that's very interesting. In fact, if you wish to make that available to us, we're quite happy to promote that on our website and distribute around, because I think that's a very important activity you've undertaken there to try to inform the market as to some of the issues relative to offering these services like CFO. It's not easy, and the more information people have, the better, I think.
Well done, Dale. That's fantastic.
Okay, well, we'll just finish off if we can. I just So would you like a free, no obligation trial of ESS BIZTOOLS? You can have it. We have 30-day free trials whereby you can try the product out in your own office to see how it works. So you can register for the trial, and we will be placing on the website the actual email address you have to go to get that trial. Also, if you would like a no obligation webinar, will take about 60 minutes. We're quite happy to present that to you and your colleagues in your firm. Just send me an email, please, peter@essbiztools.com.au. Tell us your preferred date and time, and we'll do our utmost to accommodate your requirements. And either myself or Mark will present that overview to you, and you'll have a better idea of how ESS BIZTOOLS operates. Our next webinar in this series, targeted accountants, bookkeepers, and business advisors, is next Friday at 12 noon AEST. And the presenters are Amanda Gascoigne. Amanda is going to be making a presentation on starting the new year, the new financial year, with success mindset and some practice management tips to help you achieve this. Amanda's an experienced accountant, but these days concentrates on advising small and solo accountancy businesses all over Australia and New Zealand. And she's a very good presenter, and I think you'll find that her comments next Friday are very interesting. And we have the other presenter that day is a gentleman that I've done a number of presentations with. He's the co-founder and managing director of Virtual, Matt Vitale. Virtual are currently the most successful crowdsourced funding intermediary organisation in Australia. They are very well organised. They are based in Melbourne, but they are handling clients from all over Australia. And I think you'll find what Matt has to say will be very interesting, and should nearly be compulsory listening for accountants, because I think you need to have a far better understanding of the funding opportunities that your clients will have from now on, where dealing with banks is going to be tougher and tougher. So that's on next Friday. And to register, please go to our website, essbiztools.com.au. And you can get more information by going to our website, where we have a Learn More on Survival in Difficult Times, which covers the other problems that we had that were facing us in January. We updated the material then to bring it up to date with bushfires, droughts, and floods. And then along come this thing called COVID-19 coronavirus. It's all embedded in survival in difficult times. And you can contact us. So please stay safe. Thank you, Mark and Dale, for your participation today.
Thanks, Pete.
Thanks, Pete.
The accountants, bookkeepers, or business advisors ultimately watching this video, whether it's today on Facebook or over the weekend in your own time when you watch the recording, good luck in your firms. And if you do have any questions of me or Mark or Dale, please send me an email, peter@essbiztools.com.au, and we will get back to you. Stay safe. Have a great day. Thank you for being with us. Goodbye. And I hope everything goes well for you. Bye-bye.